Welcome back to another Monday Market Update. My name is Brad Lupkus with Frontier Bank Wealth Management and Trust. And here's what the markets did last week. Last week was a choppy week for the stock market as investors balanced the continued good news that we see on the coronavirus vaccine front with the bad news that we continue to see with the worsening pandemic in most parts of the United States and over in Europe. For the week, the S&P 500 closed down almost 0.75%. Year to date, however, the S&P 500 is still up almost 12% on the year. The Russell 2000, which again just measures the performance of small companies here in the United States, that index was up 2.4% last week, bringing its year-to-date numbers up to just over 8.25%. If we look overseas to the developed markets index, that index was up 1.8% last week, bringing its year-to-date total up to 2.5%. And then the emerging markets index, that index was up again 1.8% last week as well, bringing its year-to-date totals to almost 11% for the year. So all in all, a week that we should probably expect to see more of here in the near future in the stock market. There's two different ways to look, and not really different ways, but just two different outlooks that we have for the economy and for the market. In the near term, we should expect to see what we saw last week. A lot of volatility, a lot of choppiness. There's no question that as this pandemic has gotten worse and more cases have come in, hospitalizations have gone up, some states and countries have begun to re-implement the lockdowns that we tried back in the spring. Now, what we know that this is going to do is it is certainly going to slow down the economic recovery that we have seen here in the last 6 months. There's no question about that. And if it continues to get worse, it certainly threatens to reverse all the gains that we've seen in the last 6 months and throw us back into the recession territory that we saw back in the spring. So as a result, we should probably expect to see a lot of choppiness in the stock market in the short term. We're going to see a lot of ups and downs in the market as investors respond to the lockdowns and economic data that continues to come out here in the short term. We can balance that gloomy short-term view, however, with certainly a more positive long-term outlook. Now, barring any major setback among the three possible vaccine candidates that we have in place right now, it's quite likely that we are going to have a vaccine in wide distribution sometime early next year. We have three very good candidates that have shown very good responses and results so far. And barring a setback among all three of those, it's likely that at least one of them is going to be in major distribution starting next year. What that is going to mean is that is going to accelerate the economic recovery that we've seen so far. It's going to accelerate this return of normalcy that we are all longing for. And with that, it is going to unleash this pent-up demand that all of us are certainly feeling right now, whether it's wanting to travel or go out to eat somewhere or go to a concert. This pent-up demand will hopefully unleash a new wave of economic expansion and recovery, which will hopefully translate into positive gains for us as investors. But near term, we're going to see a lot of volatility. What I would recommend is keep your eyes on the longer term perspective. Make sure that your money's well diversified right now. Make sure that you have a plan in place for your money right now. And keep that long-term perspective to avoid making any emotional decisions with your investments. Thank you again for watching this week. Again, if you do have any questions or comments, please feel free to leave them below. I hope you and yours all have a very blessed Thanksgiving, and we'll see you next week.